Tēnā koutou katoa, ka mihi konati whatua raki, and thank you, Minister, for your address. Ko Samantha Barrass taku ingoa, ko taku mahi, ki te mana tatai hoko hoko, ko te mana whakahaere, tēnā koutou, tēnā tātou katoa. Well, thank you for inviting me to speak today, and thank you, Liam, for the introduction. Yes, I'm a Christchurch girl at heart and spent a bit of time there over the summer holidays when the weather was pretty terrible, but that was the kind of mixed summer that some of us have had in New Zealand this year. Last year's FSC Outlook was a particularly momentous one and something of a launch pad for the financial services reforms that have been undertaken by the new government. This includes significant changes for the FMA, including the transfer of CCCFA responsibilities and the streamlining of conduct regulation. In the middle of these recent reforms, 2024 has seen the FMA focus on smoothly implementing a number of new regulatory regimes. And going into 2025, we're looking beyond implementation and into the practical approach we are taking and will look to take to our expanded regulatory remit. When I spoke to you in September last year, I said that the FMA was very focused on working to make sure that our regulation practically shifts the dial for New Zealanders. And this year is about making how we want to do that real for the firms that we regulate. As we've said before, we approach our role with the underlying philosophy that we cannot simply regulate for the sake of regulating. We are constantly considering whether it passes the so what test. In a nutshell, it's about focusing on the things that matter. That is, thinking about the end results we want to achieve and ensuring that the work we do works to achieve that. While this has already been our approach to some sectors over the past year, in 2025, we're planning on stepping up this approach in a way where you should see a tangible difference. So what are the things that matter? As a financial conduct regulator, we're of course focused on making sure that consumers and investors are rightly confident that firms will treat them fairly. Closely entwined with this is our overarching statutory objective of fair, efficient, and transparent financial markets. And we also want to ensure that our regulation is consistent with growing the economy and enabling innovation. New Zealanders should have access to leading-edge financial services and products that will enhance their lives. Our recent approach to financial advice is a good example of our focus on the things that matter. While we have been encouraged by the progress made since the introduction of the new regime, a key theme in our Insights report last year was the distinction between a tick box versus purposeful approach. We offered example of how good practices were not always about meeting regulatory requirements to the letter of the law, but also about shifting the dial on how regulation positively impacts the value of advice and the level of consumer trust and confidence in seeking financial advice. Our monitoring of financial advice providers has continued to evolve, focusing on what compliance is actually achieving. We have seen some providers take what seems to us to be overly conservative approaches to meeting their regulatory obligations. We will want to understand the reasons for this, particularly to check that business models are not being skewed by an unnecessarily cautious approach to compliance, thereby creating friction and restricting the availability of advice. In these cases, our feedback isn't focused on doing more compliance, but working with firms to understand the roadblocks and to rethink how they're approaching their decisions for achieving the overall purpose of the financial advice regime. This is regulation with a purpose, not regulation for the sake of it. Our focus on the things that matter extends beyond just our monitoring and supervisory relationships. We're also applying this focus to the wider work we do to support innovation and growth. In December, after working closely with FinTech New Zealand and Minister Bailey, we launched a pilot regulatory sandbox and opened it up to expressions of interest. Sandboxes allow us to partner with firms to test innovative products, services, or business models. They can help to spur and incubate innovation by allowing both startups and established firms to test new products and services in a controlled environment. Taking a pilot approach gives us the chance to gain greater insights into the benefits and risks of financial innovation and new technologies. By testing a product or service in a regulatory sandbox, we should be able to better assess the visibility, the viability of innovative products and services, and gain insights into the innovation's potential impact on investors and consumers. We've received 14 expressions of interest already and have been impressed by the quality and breadth of the applications. And we're going to be doing this in 2 cohorts, and we're in the final stages of confirming the first round of successful applicants who are going to take part in the sandbox, and we are looking forward to announcing them in the coming weeks as we move to make the pilot a reality. Well-regulated financial markets are a cornerstone of a successful economy. And we've been pleased to work alongside the industry on Minister Bailey's priorities. The roundtable discussions involving FMA staff, MB officials, and representatives from across the industry have been invaluable. And I'm sure that the Minister's announcements following the work done in these roundtable discussions will have been welcome to many of you. And we support the proposed changes to make prospective financial information voluntary for IPOs. We're also supportive of the consultations exploring ways to support KiwiSaver investment in unlisted assets and adjusting the thresholds for the climate disclosure regime. Part of the FMA's role is to promote innovation and flexibility while also ensuring consumers understand what they are buying. A good example of this is the wider work being done to encourage further investment in private markets. We can see the potential benefits here for New Zealand investors and the economy, and we know that we can learn from other jurisdictions like Australia, where levels of investment in private assets are much higher than here. We must also apply a New Zealand-specific lens to the issues, ensuring we reap the benefits of this investment while ensuring investors clearly understand the implications of this for their investment savings. Our job as a regulator is to help identify what the industry needs to do to navigate risks and opportunities and raise awareness of shortcomings that may result in poor consumer and investor outcomes. Liquidity risk management is one practice the industry needs to be particularly good at as we move into greater investment in private markets. Our concerns around this are long-standing, dating back a number of years. And while our board debated whether we might take a firmer approach here, such as through enforcement action or seeking more detailed regulations, ultimately our preferred approach has been to trigger a sector-wide set of conversations in the first instance. And that's why we updated our guidance on liquidity risk management last year, and why firms should expect us to take further interest in these practices in the future. The Prime Minister's State of the Nation speech made it very clear that the government's focus this year is on growth. Everyone in this room has a role to play in growing the economy, and that includes us. If there are specific examples of unnecessary barriers you face when trying to comply with regulation, please do raise them with us. We have a track record of listening to these and working together to find solutions. In fact, we have a statutory requirement to do that, which we take very seriously. In the past year alone, we've had conversations with firms on the barriers they're facing with New Zealand's capital market settings. And we've also been pragmatic and flexible when it comes to exemptions for COFI licensing, as well as climate-related disclosures. We will continue to explore whether there are other unnecessary barriers with you in our meetings this year, and welcome you proactively raising the issues with us as well. A key focus for us has been, and will be again this year, about working closely with the industry to smoothly deliver regulatory change. That work includes preparing for new regulatory functions on the horizon, as well as fine-tuning parts of our expanded remit that are already in force. Among them, of course, the COFI regime comes into force at the end of next month. And I do want to take a moment to pay tribute here to all the people within your firms, as well as our licensing and frontline supervision teams. There has been a lot of hard work on all sides, and everything is currently on track with 67 licenses issued to date. We will continue to support the industry during the implementation of COFI, which includes the release of an insights report on the fair conduct programs. This will highlight observations that we've made through our engagement with firms during the license preparation and assessment period. As you all know, over recent years, we've taken enforcement action against firms who have not delivered on promises about products and services, which have in turn detrimentally impacted their customers. Misleading and deceptive conduct will continue to be an important enforcement priority for us across the market. There are many important lessons for all firms to take away from our enforcement work, and this year we will be increasing our proactive engagement with the industry to talk about our approach to enforcement and the outcomes that we are seeking from our work. As we commence our COFI supervisory work from April, we will be looking at firms where there has been limited or no self-reporting in the past. A particular area of interest will be around the fact and content of regular product reviews. These reviews are all the more important when we consider how customers may have been disadvantaged over long periods of time when reviews have not been undertaken. The introduction of COFI is particularly timely when we look at some of the key priorities of the government, namely competition in the banking sector. So when we think about the systemic issues that underpin low innovation and lack of consumer choice of financial products, some of the changes that firms might make under COFI will help to serve to increase competition. And what do I mean by that? This includes looking into systemic issues that reflect a lack of competition, such as legacy IT systems, which can be dealt with as a matter of conduct regulation. So this will be something that we will be very much looking into as we implement COFI. So how firms implement their fair conduct programs could also inform issues relating to customers switching to competitors, impediments to innovation, and enabling distributors, such as mortgage advisors, to provide greater transparency to support decision-making by their customers. The government's decision to shift responsibility for the CCCFA from the Commerce Commission to the FMA has also been a big focus for us this past year. The transfer of credit functions is a big change for regulators and for the industry. On the FMA side, hundreds of firms will be regulated by us for the first time, streamlining New Zealand's regulation into a proper Twin Peaks framework. There will be more emphasis on supervision and monitoring of the sector, and these are significant changes for the CCCFA regime and will take some time to bed in. For now, the Commerce Commission remains the credit regulator, and it's important everyone continues to work to the current system until the legislation is passed and the handover is complete. But as we await the introduction of legislation, we're working to have all the groundwork in place by the second half of this year. Work to modernise, the Minister raised this, modernise New Zealand's insurance law reached a significant milestone last year with the passage of the Contracts of Insurance Act. We will start to engage with the industry ahead of commencement around how we can work collaboratively for the benefit of consumers. And this particularly and importantly includes supporting customers, prospective and current customers, to understand what the changes will mean for them. All these changes bring us more into line with international norms in financial regulation by giving the FMA the tools it needs to be a modern conduct regulator. With that in mind, we're excited to introduce a new publication this year called the Financial Conduct Report. In some ways, the Financial Conduct Report will be to the FMA what the Financial Stability Report is to the Reserve Bank. It provides an opportunity to consider risks to consumers, investors and markets posed by conduct in the sectors that we regulate. The report will highlight key conduct issues, how we have responded, as well as showcasing good practices across the industry. Importantly, it will provide a forward-looking view of the key risks on the FMA's radar so that you better understand our regulatory priorities and what to expect of us. We will publish the inaugural report midway through this year. So, to summarise our priorities for the year ahead, we will be well focused on the things that matter most when it comes to our regulatory approach. We will apply that same focus to support innovation and grow the economy, and we will continue to smoothly deliver our expanded regulatory remit. This year is about making it really real for our stakeholders. And over the course of the year, we hope that you will see some tangible differences made in pursuit of our statutory purpose of promoting and facilitating the development of fair, efficient, and transparent financial markets. The FSC, you, its members, are crucial partners in all of this work, and we have a great ongoing relationship, and I'm really looking forward to continuing the constructive way that we work with your industry body under Kirk's leadership. Thank you again for inviting me to speak with you this morning, and I think we've got some time for questions.
Thank you, Samantha. That was really interesting stuff. There's some questions, a question I had, and then questions on the Slido really to pull together, which are around the balancing act for the FMA. One at the top of the Slido right now is mentions that the Minister talked about courageous litigation and suggests that the FMA may have been, could have been, on the excessive side of litigation in the past few years. I know that's probably prior to your time. And there are other questions there about how you can ensure the industry is taking the right lessons from enforcement rather than wrong lessons. But I think they all go to that balance as the government looks to grow.
Yeah, there's a rule. You're constantly in a balancing act as a regulator. So on the one hand, it's important that firms, that you all know that all of you are working by the same rules, so there isn't a race for the bottom, and that you've got confidence that when you're doing your job to comply with the requirements, that those that don't are held to account. That's really important. And it's important because that is a bedrock for providing justified consumer and investor confidence to be actively engaged in the financial markets. So all of that's really important for growth. But we need to get that right, and we need to continuously be looking at, are we over, are there requirements that aren't adding any value to the to the work that we do together, and therefore could be unnecessarily cutting across innovation and opportunity. So there's actually quite a balancing act that we have to be continually thinking about, and what might have worked and what might have been appropriate 2 or 3 years ago may not necessarily, given all the changes in domestically and internationally, be right going forward. And that's why the relationship with the industry and us really kind of being out and understanding your business models and how you work, not low-level compliance areas, but actually how you're taking your strategies and business models forward, is critically important so that we can get the balancing act right, because we're all in this together.
Yeah, look, it's always going to be a live situation, isn't it, with that balance? Question here about the sandbox, the regulatory sandbox. It's framed as, well, the FMA wasn't keen on the sandbox idea for several years, and now has decided to launch it. What was behind the change in decision, or is it a change in mindset there?
Well, I think we've always been interested in innovation, and we've done a lot of work in the past to work alongside firms that are innovating. And one of the things I've been slightly cautious about, particularly when I first came back to New Zealand, was the way that I saw sandboxes working in some other jurisdictions, was that they were in very, very large regulators, in very, very large financial markets. And what I saw was actually quite a lot of bureaucracy around the way the sandboxes worked. And we were kind of first of all looking at how can we work, given that we're a smaller regulator in New Zealand, how can we make that actually part of what we do? And we already, we'd like to think that we do a good job of that. I think what we've seen in recent times, and we've really enjoyed working with the Minister's office in this, is that financial fintech and new innovative approaches to delivering financial markets really need something like a sandbox to be able to work within a controlled environment to test. And so that's really been, and we have seen that creating that is certainly something that we are very keen to pilot, because we want to see whether there are very good benefits that we can provide within the regulatory regime that the FMA controls. So we're very excited. I'm thrilled at the applications we've had coming through 14, where there will be some people who are disappointed in this first tranche who won't be able to get because we're needing to make sure that we do it properly. But there will be a second go. The second part to it once the first part's done.
Sure. The question top of the slide has got lots of acronyms in it that I'm going to trust that you know, but it's very popular. So when will the AML regulator change to DIA, and how will the handover be managed?
Oh gosh, so I'm not the right person to
Sounded
ask.
very specific.
It sounded very specific. So this is a matter of government policy. We are one of the AML regulators at the moment. Our job is twofold. One, we need to keep doing a good job of that as far as our supervisory remit for AML is concerned. The second good job that we need to do is to work with the government in any changes that there may be in that in that area.
Sure. And speaking of, I guess, government and legislation, there's a question there about, that firms leaning into an overly conservative approach and the concern around that. Is that overly conservative approach to compliance reflective of poor drafting of legislation, and is the FMA applying discretion the right approach?
Yeah, it's something that we're seeing particularly in the larger firms, and I'm just going to give you actually a couple of, just bear with me, I put my glasses on. We've seen it we're going to see it a little bit quite a lot in the financial advice area in the larger firms, and I'll give you kind of a couple of examples that we've got. So in large firm, the advice process hurdle is so inflexible and conservative that staff members do not want to compromise themselves by contravening policies and simply do not offer advice. Another observation from my teams who've been out looking at financial advice, looking at some of the big firms providing financial advice, where a product sale is made, such as a home loan, and no advice is offered on any supplementary products, such as mortgage protection insurance, because the team member is reluctant to follow an unduly rigorous advice process for the fear of missing a step. So this seems to us to be an issue that, well, for us, we're wanting to discuss it with the firms concerned. We're very alive to it. Access to advice is really important for New Zealanders. It gets more and more important every year. And we are keen to use our discussions with firms to understand why they are making the choices that they're making, when we, as a regulator, are telling them that you do not need to have these processes. So that will be quite a big item for us this year.
Sure. A couple of questions and some support for the questions around what's become of the FMA's outcomes-focused approach to consultation, and are you still focused on that? And can we expect any changes around that?
Yeah. So we will be publishing a document shortly, providing an update on that. But actually, outcomes-focused or impact or regulation that passes the so what test, frankly, is not about a document. It's about what we have begun to work on over the past year. You've just heard me talk about it in relation to our financial advice work, which is you should, as this year goes on and as we go into 2026, you should begin to feel a tangible difference in the types of conversations that you have with FMA teams. You should expect to see that they are much more strategically focused on the things that matter and much less focused on low-level compliance issues. So there's not going to be any big bang, but outcomes-focused regulation is about regulation that focuses on the things that matter. It's about making sure that the work that we do with you is focused on the things that matter and not low-level compliance issues. And you will see that and begin to feel that as this year goes on.
There is one at the top of the list about climate reporting, and if the FMA still has a focus on in the mix around climate reporting and all that sort of thing. I mean, I guess the environment possibly from the United States down has shifted a little bit, but a lot of people are still very concerned about what's going on there.
Yeah, we've been really pleased with the efforts that have been made, that we've seen with the approach to the climate-related disclosures regime. Our job is the oversight of it. We don't set the rules of it. That said, we are very supportive of the proposed changes to lift the thresholds. This has been, we were always concerned at the beginning around setting the thresholds for climate-related reporting at too low a level. We felt that actually, if you set them higher, you could broadly capture what you were wanting to capture, but without creating a lot of unnecessary compliance costs amongst some of the smaller firms. So we're carrying on with our job, which is to continue to implement and support the industry in the climate-related disclosures reporting that they're doing.
Look, we are going to have to wrap it up there, just bumping up against time and conscious we've got to get you guys back to your offices at some point to help drive New Zealand's productivity. So if you could thank Samantha, and we'll move to the next speaker.
Thank you.